Good morning, everyone. Today is Monday, May the 1st. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. What are we looking at? Again, if you're just looking at the futures, you're not looking at SPY, here's what we are staring down. We had a month that was fairly shallow in terms of its width. The month prior was huge, but this is a breakout pattern, right? We are confirming the close over the heavy congestion of 41.44. That, to me, is the line in the sand. Now, what happens to lines in the sand? Do we notice? They get broken. So when they get broken, watch for them to recover. I like the 41.47 area. If they pull up and hold above 41.47, we've got good buyers sitting in the mix. This is an expansion formation in general. My thought is this: if we get up above 4,198, we're going to have a blast up that's going to run a bunch of stops, and then a shallow fade where everybody's going to think to themselves, no, that's the real short. But they're going to come in and we're going to hold some of these levels. My thought is maybe 41.70. That's going to be that first bounce. If we bounce it into 41.70, we can't get above 4,200. We're going to have ourselves a rotation back downwards. I do believe this is an overly aggressive set of price action motions, but it is my suspicion that since this is a short squeeze, we are going to see this market aggressively price higher because it's going to run the shorts out of the building. And then people who are totally priced focused without understanding everything else that they want to be focused on or should be focused on, they are going to start buying as well. So we could have ourselves a very big squeeze into the 42.38 area. As it sits right now, first pass bounce up, going to run some stops, shallow fade, buy zone. If we lose 40.78, I say we shift plans and then start thinking about a bounce that fades, or you can just chase it down into the next line of support, which I believe is somewhere around 41.57. Taking a look at the NQ, also same sort of pattern. I mean, sideways. The last week of the month engulfed the entire monthly formation. And to me, again, that's not a natural move. Big savage run down, big savage run up. You could see the traders positioning short, thinking the market was going to chop and fade lower. Instead, they get turned around, moved all the way back up. This would normally be a bottoming formation. A topping formation, topping formation, but what we have, an explosion here above this 12,290, 13,300, 13,034, excuse me. Boy, that was hard. All right, so that tells me I am very likely to come in, but because I'm in a breakout formation that came in, tested old resistance, held it as support, and then moved back, it tells me that I'm very likely to see an upward press, but this upward press is ultimately going to exhaust, in my mind, simply because of what's coming down the pike. This is all money chasing itself, trying to get a good position. It's really, really awful. All right, so that's my setup for right there. Watch the lines in the sand. The low of Friday going to give us, low to close of Friday, going to give us some kind of pressure event that will allow us to hold. Okay, last one. Let's look at the YM. Okay, so the Dow, same sort of thing, is sitting here in this space. These are the Dow futures, of course. Haven't moved these back. This is a really big week to the upside. It's not as strong as the others, right? So this one isn't really telling us, hey, listen, we're going to have a price breakout, But it's as simple as this. We get up above 34,250, the market's going to start running stops. The shallow fade that holds the close of the prior week is going to give us the next buy zone. In my mind, if it loses the level, step aside and wait for it to recapture the level. That will give you your floor of support and then the bounce higher. All right, that's it for me, folks. Take care. Trade well. I'll see you all tomorrow.